Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Dollar strength has prevailed in the backdrop of the Middle Eastern conflict. Yields have been rising across the board and gold has been in a league of its own. What's interesting to note is that we have been observing significant weakness in the Asian pairs against the US dollar, and this may influence the narrative of the rupee despite a very positive trade deficit number yesterday. Good morning, JK. Dollar strength, rising yields. How do you think the rupee will fare under these circumstances? Because good macro news for us is coinciding with the troubling global developments.
Good morning, Swaraj. I think Indian macro numbers have been on very positive trend for quite some time, and not seen any hiccup there at all. But market, even in India, taking cues from the global events. One is what's happening in the US economy and also the geopolitics. Yes, as you said, the trade deficit did narrow down quite a bit last month, and uh, falling to 1.53 billion in March. That is the lowest deficit in the last 11 months, and that's very encouraging. Of course, we saw some dip in the services exports last month, and that was somewhat against the trend, but a big fall in the imports contributed to the merchandise trade deficit falling to the 11-month low. Overall trade balance is minus 2.91 billion, that is services plus the goods included. It doesn't change the picture as far as the current account deficit, which is quite manageable at 1%. So Indian macros are not really of concern. Yes, if you look at the global scenario, it's all a sea of red. Since yesterday, both U.S. economic strength leading to a revision of rate cut expectations, and also the geopolitical lingering concerns are making the market jittery. Of course, valuations and positioning are also not helping the markets. Yields have been on a roll. We saw the 10-year yield hit new high since last October. So these are things that keeping the market very jittery. Trigger, of course, came from the retail sales number yesterday, which rose 0.7% versus expectation of 0.3%. And importantly, the so-called control group, which the Fed measures for the strength of the consumption also increased quite a bit, and it was the one which actually led the market to um, trade the yields higher, and giving up the hopes of any rate cut earlier than September. So yesterday, even the good news was considered as bad news even in the stock market. We had Dow falling nearly 0.7%. The Nasdaq fell 1.9%. Yes, Nasdaq is very sensitive to the yield moves and rates. S&P 500 was around 1.6%. But if you look at the Asian markets, they are all big sea of red. Nikkei more than 2% down. Korea, then Indonesia, and Australia also more than 1% down. Our own Nifty is indicating nearly 1% down in the futures. So I think now the bears are getting a bit of a upper hand in the market because of the positioning, valuation, and also the bullish stories having been fully played out. So now we have to look at rates and also the geopolitics that having a sway over the market. So that's what it is. But then we did have other data from US also, which was encouraging in the sense the Empire State Manufacturing, though in minus, it improved from minus 20.9 to 14.3. So manufacturing improving. That did not add to the sentiment. Eurozone industrial production data also came better on a month-on-month basis at 0.4%, 0.8% from 3% down in January. Today, we did have the China data also. GDP, which was improved to 5.3% from 5.2%. Expectation was for 5%. Of course, industrial production and retail sales, the numbers for March were down So that was a mixed picture as far as China is concerned. The most important mover in Asia today was the yuan central fixing, which was at 7.1029 by the Chinese central bank, and this is the highest that they have fixed in the last several months. And this led to further weakening of Asian currencies. Korean won touching 1,400, and the IDR trading in 2020 levels at 16,200 mark, and other Asian currencies like Taiwan and Thai baht also weakening. So under these influences, the rupee is also showing a break above 83.50, showing 83.55 right now. Yes, we have seen earlier cases that even though the offshore markets show rupee at a weaker level, in the onshore market it does open lower, quite possibly due to the central bank selling. But we had to see today because a bit of rupee weakness spurred by global EM peers weakening is not something out of sync. So we should ideally see rupee weaken towards 83.60 during the day. Of course, that will also bring in a lot of stop loss buying from importers who had probably waited for 83.50 to break. So that will be something. Yes, how much, where and how much the central bank supplies dollars will be key. We already seen the Indonesian central bank coming out and saying they're trying to maintain the demand and supply mismatch. So central banks are on the watch. More particularly after China, it is the Bank of Japan, which is now on the watch because the dollar yen is closing in on 155, and it's become a very sensitive currency now. And there was an official who also said from Japan that they are in touch with other global partners. So these kind of statements somehow indicate that there is some closeness to an actual action from the Bank of Japan. So we really see 155 might be test, but I don't think anybody will have much conviction to buy the dollar at those levels, whatever maybe the US yields, because the asset markets are not doing well. The bond prices are falling, equity prices are falling. The only one which is still ruling good is the gold, which is once again closing in on 2,400 mark. It's a clear reflection of a risk-off sentiment in the market, and I'm sure that is going to reflect in the Indian market as well today.
Thank you, JK. And from what I got was that US retail sales again paints a picture of US exceptionalism, and even the control group numbers, which the Fed tracks, has increased, pushing the yields higher. Chinese GDP improved, but the industrial production was down. What's interesting to note is the yuan central fixing by the central bank was higher, and it has led to some further weakness in the Asian currencies, Korean won, Thai baht, Indonesian rupiah, and even rupee as of now showing a break above 83 half in the pre-open. And equities, of course, are in a sea of red. Uh, for rupee, one positive macro development was, of course, the trade deficit, which narrowed last month, falling to 1.53 billion in March, which is the lowest in the last 11 months. But despite all of this, the global picture remains quite uncertain. US exceptionalism, dollar strength across the board, weakness in Asian currencies, and of course, Japanese yen trading at multi-year lows. So it's a development we'll keep on tracking. That's it from us today. Tomorrow is a market holiday on account of Ram Navami. So we will be catching up with you on Thursday with the latest in the financial markets. Thanks for listening.